Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we are going to be looking at Bitcoin for our weekly Bitcoin update. And we're just going to get straight into it today. Now, first thing I want to say is I want to thank the patrons who showed up for the live stream yesterday, and thank you for contributing and joining in. It's always appreciated. I've now finished timestamping it, and you can now follow the same link to yesterday's live stream and navigate it a lot more easily. So for those of you who did not manage to attend, you can now get around the thing. It was another 5.5 hour, I think it was almost 6 hour session, and we looked at Bitcoin, we looked at Ethereum, we looked at the US stock markets, looked at a few stocks, we looked at Meta and the opening, looked at some live opportunities there as well. And yeah, we ended up doing quite a few things, so it was another successful live stream. So thank you very much for joining in. If that kind of thing sounds interesting to you and you haven't joined the Patreon yet, please consider doing so. It is the start of the month. There'll be a link in the description box below this video, and I'll remind you at the end of the video you can go and check it out if you're interested. But now it's time to look at Bitcoin and figure out what's going on, or at least try to. So the first thing I want to do is I just want to take away the count for the moment. And I just want to remind people, in case they are new to the channel and they didn't see last week's video, the case I put forward for all of the strong confluence that we were witnessing at this low and why it is we bounced. Now, we can see here that we came to the 61.8 of the grand pitchfork, of the primary pitchfork of primary 1 and 2 pivot, and found the 61.8 here, but there's a lot more than just that. Yeah, so let's turn that off. And this is just a quick reminder. So, and then we'll get into what I think and how I feel about it, basically, and the various options from an Elliott wave point of view. So, first thing we got was a perfect parallel channel. Pivot, to pivot, to pivot, to pivot. Like that. Okay. We then got a perfect 1-to-1. Wrong one. Of this dominant pivot to the dominant low to the next dominant pivot to this new low. Perfect 1-to-1 and bounce. Okay. Hit the edge of our regression channel here. You have to excuse me, my voice is a little hoarse after yesterday's live stream, so came straight to the edge of the regression channel here and we bounced. And also kind of front running this median line on the pitchfork here. Could still come down and test it, but either way, a lot of influential factors, a lot of technical confluence as to why this was potentially the bottom. And I think I expressed in last week's video that I was very confident at first, and then my confidence has waxed because of the lack of impulsive move off of the low. Now we do have a motive wave count off of a low, a bullish low, which is the idea of a diagonal that's still in play, and we're going to discuss that in a little while. And we're also going to go through the various other interpretations as well. So let's start with the flat that we've been observing for months and months and months. I first introduced this idea in September last year, before we even came up in the B wave high, that we could well end up doing a flat. I still think this is likely the case, but the issue is counting down in the C wave here. I keep having problems with how to do it. So this is probably weighted equally now with my WXY. I flip-flop between them regularly. I mean, I mentioned that in the live stream yesterday. I go back and forth on the idea. So the various ways we can get down here. So we've got a C wave impulse like this. Now the problem I've got with this one is if we want to come to a reasonable target for the completion of our C wave between 100 extension, which we've already hit and bounced, to the 123.6 to the 1618, then if we're going to complete that C wave, then we're going to have a shorter 3 than the 1 and a shorter 5 than the 3. Okay, no overlap here, so this is not a diagonal yet. It could turn into one, alright? So before people say, oh, you can't have 3 as the shortest, I haven't got 3 as the shortest. There's a limit on how far the 5 can go, and it can't go beyond 100% the length of the 3, but the 3 in this scenario would have to be shorter than the 1. Now the issue I've had with this, as I explained yesterday, is there's no clear extension built into the wave 1, and we know the wave 5 has got a limit. So there appears to be a lack of an extension here. Now we can live with it, because this is not an impulsive wave 1 or a 3 or a 5 in a larger impulse. It is it's part of a larger correction, but it is an impulse within a C 5-wave structure. So I've had a couple of discussions on that about whether or not we have to see an extension in it, and it's up for debate. Either way, it's following the rules. 3 will not be the shortest if 5 completes less than the length of 3, but this is not ideal. The next idea to get down here in a C is an ending diag. Now, you'll have to forgive me, but I've forgotten who you are, your name, unfortunately. Somebody brought this up in a live stream yesterday and reminded me of the possibility of this, and I didn't have it in my chart, which is I'd completely discounted it, apparently. And I think I discounted it too soon, because I posted it on the Discord back last month in January that this was a possibility, and then failed to add it to the chart. And I think since price has not come back beyond the 1, I basically wrote it off, thinking, well, there's no point thinking about it until we see that. But it's always good to actually have it here in case you forget completely, and I was very much in that state yesterday when I was reminded of this, so I appreciate that. It's not an ending diagonal yet. I went for a bit of a flap yesterday, thinking, oh my god, it is, and we should have been paying attention to this the whole time, and then I realised that we didn't have an overlap. So I went for a bit of an emotional roller coaster on this one yesterday, as I suddenly remembered that this was a possibility. Not one of undue stress or anything, just excitement and then sudden realisation. And we can all do that sometimes. So A, B, C, A, B, C, A, B, C, A, B, C will have to happen now and take us back above this level to get that overlap. Just a wick above would be enough. And then A, B, C into the 5. The 2 here is going to be bigger than the 4, hopefully. Well, measuring this to get to the overlap, it will be. The 3 is shorter than the 1, which it should be, and the 5 would be shorter than the 3. And it would all check out, bunch of zigzags with an overlap, contracting wave sizes, with the 3 still not being the shortest, but being smaller than the 1, and the 5 being smaller than the 3, and 4 smaller than the 2. So there you go, it's a possibility, and if we come up above this level, then this has to be weighted more heavily. However, if the 4 ends up being bigger than the 2, right, in size, then it's more likely we bottomed, and this is a bullish count coming off of the low. Okay, because then we can't have this diagonal at that point. So on that note, let's consider the possibility of having bottomed here. Now in that case, I think a better fit is this, which is the WXY. This is a double combination, and it works on the idea of there being a flat here, with this 5-wave structure here, and then a zigzag here into another zigzag here, which is bottomed. Now, it's also possible you could extend this further. We were talking about how we do that yesterday. It's a bit tricky because we have this 3-wave swing here. So this wants to be 5 waves, right? That wants to be 5 waves. So we had the issue of saying, well, perhaps that's a 1 and we're coming back into a 2. Well, if that's the case, 3, 4 and 5 are going to take us way beyond the targets for a primary wave 4, because we would invalidate the larger count. So I don't see that as being likely. So if we have bottomed, this is how I think we've probably done it. Now in that case, how have we gotten off the low? Well, we need to come in and have a look. So we're going to zoom in. We're going to come down to 15 minute. And we're going to have a look at the price action off of the low. So, being bullish for the moment, I know that wick is a problem, but I'm ignoring that because it's not on other exchanges. I am in the process of moving my count across to another chart at the moment, to another spot exchange. I think I'm probably going to put it onto Coinbase. But either way, I've had people giving very helpful suggestions of how to move all my stuff over, and I've been copying and pasting, but the problem is every time I move stuff over, it doesn't place it for you. You have to replace everything, so it's basically as much work as redoing the whole thing again. So I think I will just go and redo the whole thing again at some point, but I'm a busy man and I'm struggling to find time to do it. I can work with this chart either way. So diagonal off of the low. Right, so this is what I'm working with, and it's not particularly strong in terms of the confidence I have in it. So 1, 2, 3, that's cool. 1, 2, 3. C goes beyond the A, but it's a little short, a little peculiar, but that's okay. A, B, C, that's a little better. This is horrible as an A, B, C. Right, it looks like an impulse. And this could subdivide as an A, B, C, zigzag. And then we would have our 1, 2, 3, 4, 5 into a 1, then a 2, then off we go into a 3, right? And we've bottomed here. Nice and simple then. If this point here at 35, 556, spot 56, if this gets broken by a move through here, then this diagonal count is invalid, as the wave 4, or our proposed wave 4, has come in beyond this point. Right now, however, there's a caveat to that. If we get a higher high beyond here, then this is no longer the case, because this is now a completed diagonal into a 1, and now we can look for a retracement into a 2. I'm saying if we break this level before we set a higher high, okay, then this high back here, let me just put a marker on that, because I am a bugger for not reading out price, and people tell me in the YouTube that, Tom, you really have got to make more of an effort. I promise you I'm not doing it to piss anyone off. I just forget, you know. I point at this bit and that bit, and then just forget that I'm not necessarily reading out the price. I've got the luxury here of sitting and looking at monitors which are 4K large monitors, you know, so I can see everything. But if you're watching this on a phone, I get it. So let's just reiterate what I was saying. If we come back above this level in a 3-wave move, another zigzag, and we get a higher high above 39291, and we complete a 5-wave diagonal structure, then there's only then this is no longer an invalidation. Alright? However, if we roll over prior to that occurrence of a higher high and take out this level, then this whole thing has been invalidated and is no longer a diagonal, and it's far more likely we have a bearish 3-wave count here and we're impulsing lower in another move down. Okay? Is there any other caveat that needs to be made clear? Yes, of course, the last move has to be shorter than this wave 3, so let's just do that now. Take the length of the... no, I've put it in the wrong place. Take the length of the 3, project it from our 4. So there is even room for a throw over. Here we could do this, throw over the top, but we can't come across this, we can't go beyond that level. So it's not a contracting ending diagonal, so there's another level. So let's just throw all these in. Problem with a diag, you see, it's got so many rules that it's got to follow. You know, if it breaks below, if the 4 breaks below the 2, it's invalid. If any of the subsequent waves in the contracting diagonal prove to be longer than their counterpart, then it's invalid. So there are several rules in play, but because there are several rules in play, it creates a pretty tight range, and therefore things are clarified in terms of valid or invalid relatively quickly. So here's the final level. Diag invalidation. We will say 4 through 2 before new high. I guess I can't really think of a simpler way of saying it. Okay, and then at this end we've got diag invalidation 5 longer than 3. Okay, there you go. So there's 2 points here. That gives us a range now for the current price between 40194 and 35556, spot 56. Okay, so we've got a range in place. The caveat is how we do it. So, you know, break this before a new high, diag is invalidated like that. Break this high, okay, and diag is invalidated like this. Okay, hunky dory. Right, I think that's covered the diag, so let's put all this in the diag folder. And let's get rid of that. So that's how we get off the low as a bullish count. Could break down any moment. Okay, so but it could validate as well, but one more move. So if we get a move, just to be absolutely clear, that comes in before this, completes here, and then reverses, then we've got our 5 waves completing a contracting leading diagonal. We'd then be looking for a retracement in a wave 2. Here's the 61.8 here, pretty much bang on the invalidation point here. It's just a little bit of coincidence, I think that is. So we could come back to a 61.8, we could come deeper, we could come to the 50, and then we're going to get a clean impulse out. Now it could be, once again, a smaller diagonal in the 1 of the 3, but we would expect to see an impulse out of here, right? Into a 1 of a 2 of a 3 of a 4 of a 1 of a 3 of a so on and so forth, as we start to build this bigger wave up. So that's the bullish idea. Okay, so let's just save the chart. Alright, so now how do we get down lower if we're bearish? Now that we've covered all of the diagonal parameters for the ending diagonal, we'd have to use a diagonal and A, B, C, and we'd have to come up through here, break this level, but not this level. Seems very, very strict to me for something as volatile as Bitcoin to pull that off. Then we've got the idea that we put a diagonal in off the low, and we've got these rules to obey, which we've just covered. So how do we get lower? Well, this, I think, is how we get lower. Shared this on the live stream yesterday. Put in a cursory 50 to 61.8% retracement off of an impulse from this Y wave here. So we've gone whoops a daisy, excuse me. We've gone W, X, Y, and it's a zigzag and a zigzag. Okay, it's a double zigzag. And then we've come down here in 1, 2, 3, 4, 5, subdivision in the 3, 1, 2, 3, 4, 5. That brings us into a 1. Then we've got a 2 to come. And then we've got 3, 4, 5. They're not placed, so don't worry about the price there. Right, so this gets invalidated if we go back above the Y wave. This is... And I know you're probably getting a bit annoyed or stressed with me saying, Tom, there's too many options. This is what it's like when Bitcoin's trying to bottom, or when it's near a bottom. Go back and have a look how ambiguous the price action can get. The tops are way easier to call than the lows with Bitcoin. The lows can be an absolute pigging nightmare. I guess it's because the bulls have just become so bloody cowardly and utterly disenfranchised and fearful that they just don't want to pull the trigger, and the bears are now getting so hesitant, having given up 50, 60 odd % or so, that they just can't believe it's going to continue, and everyone's locked in this situation of doubt, and no one wants to pull the trigger either way. So we end up with this fucking about at the lows, and it can go on for ages. Yeah, so I know it's annoying, but we're just gonna forgive the bad language. We're just going to keep plodding along until some of these levels break and help us confirm a little bit better what's going on. Okay. So this now goes in with... Let's lock all of those in place. And put them in with that bearish low 2 option. Save the chart. That's obviously going to be married up with the idea that we've got another impulse lower, which was this idea, and then this would be part of it. Okay, but as I mentioned earlier, and please don't go off at me in the comments, I had a couple of people the other week saying, oh, you can't have that because the 3's too short. The 3 can be shorter than the 1. The 3 can be shorter than the 5. It just can't be shorter than both. It's already shorter than the 1, so the 5's got a limit on it, and it can't go beyond that point, otherwise it would not be a valid impulse. But for the moment it looks like a valid impulse to me, so that's how we get down lower. That comes down sufficiently to bring us in to those target zones of the 1 to 1, which we've already hit. We've already hit that 1 to 1 here, right? Then we've got the 123.6 pretty much around the previous lows. Then we've got the 1618 somewhere around where our projected limit for the 5 is. Right, so we can come deeper into this target zone here and work our way down like this. Right, it's not a diag, it's an impulse, but it's just not looking like a typical impulse. That's that option. So that's how we get lower. Right then, it's unfortunately not going to get any less complicated now, guys, because we still have more ideas to consider. There is an old school bullish count here that needs to be considered, but don't worry about that, it's a lot closer to breaking. So let's just bring that one up, shall we? And let's bring in the levels associated with this. So 1 to 1 is here. This is basically here, in my mind, having broken all Fibonacci retracement levels as kind of like a last resort. Okay, not direct confluence with a retracement for a wave 2, but just so much other confluence that I pointed out. You know, all this stuff that I mentioned earlier, that this is likely going to be the last stand for a wave 2. And this works on the idea that this is the invalidation point at 29325, and this was a 1 and this was a 2. Break this level, this could just be, the whole thing can just be deleted, and that would make life a lot simpler, wouldn't it? Right. Only way off of the low here is the same diagonal we're using to get off of the low with a completed flat or completed combination, which is that stuff down there. Okay, so all of that has to be obeyed and understood for this to function as well. So that's the bullish count, almost dead. Probably getting rid of it. If we take, the thing is, break this low here, right, at 32910, break this low, and we get rid of the completed combination having stopped here. We get rid of this bullish count. We get rid of all of that diagonal low, and we get rid of the diagonal low coming lower if we don't get the very strict rules for that. You see what I'm saying? So one more low is going to clarify a lot. However, if you can achieve the type parameters we've discussed and stay bullish above this low, break this downward trend, then all of a sudden this starts to look very, very bullish. At least until we consider the next possibility. Sorry, don't hit me or get annoyed, but here's the next one. Breaking, staying above the low, getting a bullish diagonal, continuing to advance in 5 waves, and breaking the regression channel, which has gone missing. No, here it is. And breaking all of this downward trend and everything looking awesome and hunky-dory could actually just be part of a larger triangle, which is nowhere near complete yet. Alright, and we can just go out into the summer and then finally move. But at least we're going in the right direction, and this was the bottom, because actually this was the bottom. See what I'm saying? This is another bottom, and then there's going to be another bottom. But at least it won't come back lower if this is the case. So in that sense, it is a significant low, and all that confluence we pointed out makes sense. Alright, and all I've done to make this work is I've taken all of that confluence and just lined it up. So we've got the 1 to 1 on the upward trend, which is our parallel channel. Let me show you what I mean. Parallel channel. Right, that's our upward trend for the bottom of the triangle. Okay, what have I used for the downward trend of the triangle? Well, I've used the pitchfork. Okay, put the triangle on. There you go. Downward slope of the pitchfork, upward slope of that trend gives us a 50% retracement of 51,000. Could come up faster and steeper, but you'd have to come up here in a goddamn hurry. Something like this, and you could hit the 61.8, and this would be at 55,251 before we come back in an E. Okay, so let's just get rid of that as well. And there's your triangle. But wait, it gets better. We're still not done. There's one more thing to consider, and we're going to chart it up now. I've charted it up here, and that's cycle top. Now, I don't like it, haven't liked it from day one, and I'll explain why. But it is possible. I had a discussion yesterday in the live stream at the start about why complex corrections are what they are. Double zigzags, triple zigzags are essentially just the replacement for a larger zigzag which failed to materialise. The complex double and triple zigzags are there to correct price action in terms of severity. It will go deeper because the initial zigzag wasn't deep enough. combinations are there to make up the difference in time which should have occurred. So if we get a single flat pattern and it wasn't big enough, the whole thing will morph into a complex sideways combination. Here's an example. WXY came up in the primary 3, we got a flat pattern, but this is not big enough in my opinion, and therefore we morphed into a zigzag and another zigzag to waste time. Now why did we do that? Because of this pitchfork that we're trying to get to in log scale. Let me show you what I mean. 1, 2, big correction. 3, 4, tiny flat, not big enough. So we added a zigzag and a zigzag to waste more time to get to major support, 1-to-1 channel, 61.8%, blah blah blah. And then we've got 3, 4, and now we look like we belong to this pivot back here. That's what a complex correction does. If the first move is not sufficient, we will continue to correct into the future. So that's why I prefer that count. But like I said, I discussed the cycle top. I just explained to you why I don't like it, because this is way too short, and then this is way too pathetic for a fifth wave in Bitcoin. Don't believe me? Go back and look at the top of the 15 cycle. Go back and have a look at the top of the 2017 cycle and tell me how this is a fifth wave. I'm not saying it's impossible, but it doesn't resemble anything I've seen before. Normally you blow off, like properly blow off, you know, and we just meandered up to a slightly higher high. I've always been suspicious of this one, but I'm not going to write it off. And the reason I'm not going to write it off is, what if my wave degree is completely wrong? That's the only way I can accommodate this. That this is an internal move of a larger move, and therefore I can accommodate this smaller 3. This smaller 4, I should say, excuse me. And therefore we're either uber bullish 1, 2, or we topped here and we've got 1 and 2 to come. Now if this is the case, then it all depends where we're measuring from. If we take it from the low to the high, come off of log, remove the pitchfork, then a 61.8% is a double bottom. Right, so we're in the neighbourhood of everything we've been discussing anyway. 1, A, B, C, 2 at 28 grand. And then we're off into a 3. But it was but it's the beginning of a larger 3. Does that strike me as likely given the scale of the correction we would normally see? No, I'd expect it to be way deeper than that. And probably 90%. 70 to 90% would be my guess. That would be much more characterful of a larger wave degree completion. So at that point we break the wave 4 idea completely, because we topped in a 1 instead, and this is actually 1 and 2, 3 and 4 and 5 of A, and this is going to be B, and this is going to be C, and we are coming all the way back to probably below 20 grand even. And it's just a gigantic correction that's going to last well out into 2023 if not longer. Okay, that's the most bearish case cycle wave top. Do I think that's the case? No, I don't. I've never liked it at all. I feel that we are going to respect this over the long term. I feel that to me is still my preference. I've gone through all of the ways we achieve it. Okay, whether we get the ending diag, which is very tight and not very likely, continue lowering an impulse maybe to the edge of the pitchfork, alright, or we've bottomed, and we've bottomed as a WXY off of the back of all this confluence I pointed out. And I'm going to have to leave you there, guys. We'll see what happens next week. We are at a pivotal juncture. We've either bottomed, and I've got 3 counts which support it, and we've got a way to get off the low. But if that low breaks, we have to shift our opinion, we have to adapt and assume this correction is not over. Alright guys, thank you very much for joining me on this technical analysis of Bitcoin. If you're new to the channel and you like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. If you're interested in becoming a patron, There's a link to the Patreon in the description box below. Go over, have a read of the tiers. It's the start of the month, the perfect time to sign up to get a full month's value out of it. And if you're not following me on Twitter yet, there's also a link in the description box below as well. Take care of yourselves, guys, and I'll be back with you soon. All the best. Bye bye.